Gold has made a new high. It broke out of that 2530 level. Gold trading up to almost 2600 via the spot price. And the fact that gold has been outperforming, gold has been going up on average about 10% every year since the year 2000 in all the major fiat currencies. Ran up above 30, that key level. Silver is up about 27% year to date.
Gold has recently surged past the $2,530 level, reaching close to $2,600 in the spot price. This marks a significant breakout, with gold outperforming many assets. Since 2000, gold has been rising by about 10% annually across major fiat currencies. Similarly, silver in particular has risen above the key $30 level, up 27% year to date. MarioInnecco is a financial commentator and content creator known for his in-depth analysis of economic trends, precious metals, and central banking policies. He explains that recently, the U.S. Treasury announced that the interest expense for fiscal year 2024 has surpassed $1 trillion for the first time. While some argue that the Treasury market remains strong with falling yields, this trend contrasts with gold, which tells a different story. Despite minimal coverage in major financial outlets like the Wall Street Journal and Financial Times, gold and silver have shown impressive growth. Silver, in particular, has risen above the key $30 level, up 27% year to date. This highlights the divergence between fiat currencies and precious metals. Meanwhile, gold has played a role in masking a Great Depression since 2000 by offering individuals the ability to act as their own central bank. While central banks are supposed to maintain currency value, they often erode citizens' wealth through excessive money printing. Interestingly, these same banks hold gold reserves, which highlights its importance. Gold offsets currency risk, allowing individuals to safeguard wealth just like central banks do. As the famous banker Mayer Rothschild noted, controlling the money supply controls a nation's wealth. By owning gold, people can regain financial power, hedge against government overreach, and become more self-reliant. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
Recently, I think this past week, the Treasury itself announced that year to date, fiscal year to date in 24, the interest expense reached $1 trillion for the first time. And there are a lot of people out there saying, well, it doesn't matter. The Treasury market is still strong. Yields are going down. That is going to keep growing. And that's true in terms of the fiat dollar. But in terms of gold, is a completely different story. And that's what it's all about. But before we look at why I think the economy has been in a great depression since around the year 2000, we're going to refer to a pocketbook of gold and why, if you look online at the FT, Wall Street Journal, investing.com, Daily Telegraph, any newspapers in the business section, nothing about gold. Silver as well ran up above 30, that key level. Silver is up about 27% year to date. Gold is helping mask a Great Depression since the year 2000. And it's the part here, one of my favorite parts. Where is it? Yeah, gold allows you to be your own central bank. Although a central bank is supposed to maintain the value and purchasing power of a currency, it has both the ability and the tendency to depreciate the wealth of citizens through excess money printing. Interestingly, while they issue paper money, they also maintain gold as a currency reserve. That alone should tell you something. Central banks do not depend entirely on their own paper currency to maintain wealth. They use gold. Why? One reason is because gold offsets currency risk. Through the retention of gold, an individual mimics the function of a central bank and therefore negates the detrimental effects of a central bank running its monetary printing press. It's why they own it. And they don't want you to. The controller of a nation's money supply can dictate the distribution of wealth and power within that nation. As the banker Maya Rothschild once said, "Give me control of a nation's money supply, and I care not who makes its laws." Gold mitigates the power surrendered by holding a fiat currency. Gold is power. So there you go. If you want to have power over your own destiny, gold will help. And I'm not saying gold is everything, but it's very important in terms of financial power for you and your family, and maybe even friends, if you're able to help friends as well. Because I think that's really important as well, being generous about things and helping those who maybe haven't been as fortunate to know about this. Gold is a hedge against the self-serving nature of governments. Again, ponder the power equation. Gold ownership passes the central bank function directly to yourself. In the spirit of self-reliance, it is better to be your own central bank instead of delegating the responsibility to a third party like the Federal Reserve or the Bank of England. Both institutions have a poor record in maintaining currency values. I couldn't agree more. And that's why you shouldn't really worry that much when they have their FOMC meetings or their minutes.
On September 18th, whether the Federal Reserve cuts rates by 25 or 50 basis points, those holding gold shouldn't be concerned. Gold minimizes the influence of the Fed on your financial life by protecting wealth, as central banks control a currency's value. Owning gold allows individuals to act as their own central bank, effectively reducing their reliance on the Fed. Historically, gold has been a reliable hedge, safeguarding purchasing power, especially during inflationary periods. MarioInnecco highlights that from the late 1980s to 2000, during Greenspan's Great Moderation, the US dollar was strong and gold dropped from $400 to $250. By 1999, it took 44 ounces of gold to buy one Dow Jones Industrial Average, marking the peak of that era. However, since then, the Dow has been in a downward trend relative to gold. A temporary rebound from 2011 to 2018 was fueled by central banks injecting inflation into the system through quantitative easing, QE, and zero interest rates, which artificially boosted the value of financial assets like stocks and bonds. However, the Dow-to-gold ratio is now shifting due to excessive debt and inflation. If the U.S. continues devaluing the dollar and artificially inflating assets, the system risks collapse. However, overinflation could lead to hyperinflation. For thousands of years, value was measured in gold or silver, but since 1971, fiat currency, which is debt-based, has dominated. This system can't last forever, and eventually gold and silver will regain importance. While some don't see it, a Great Depression is unfolding, reflected in wealth disparity, political division, and social and geopolitical instability across the West. Let's dive into the interview.
If you're worried about September 18th, whether they're going to cut by 25 or 50, if you've got gold, you shouldn't care. Gold takes the Federal Reserve out of your life, or at the very least marginalizes it. Since the central bank is the primary controller of a currency's value, yes, it would be great to end the Fed, but you can end the Fed for yourself by being your own central bank. So let's look at these charts I spoke to you about. And the interesting thing is that usually gold is known to protect your purchasing power in times of inflation. So average, as you can see here, versus gold, XAU-USD. And when we had Greenspan's Great Moderation or Goldilocks from like the, let's say, late 80s until the year 2000, everything was fine. The dollar was strong. Gold went from 400 to 250 from around late 80s to the turn of the century. That's where it bottomed at 250. And as you can see here, you needed 44 ounces of gold in the summer of 1999 to buy one Dow. So that was the top of the Great Moderation of Goldilocks. And ever since then, the Dow has been really in a downward trend. Yes, we saw a rebound from 2011 up until, let's see here, September 2018, only because the central bankers threw so much inflation at the system that it got financial assets like stocks and bonds through QE and zero rates. It ramped up their value, but now this Dow Gold ratio is turning because they've created so much debt, so much inflation, that unless they keep devaluing the dollar and keep things artificially inflated, the whole system collapses. But the other problem that exists is that if they do this too much, this inflating, you could see the value of the currency go to zero, and that would be hyperinflation. So it doesn't really matter, deflation or hyperinflation. So you can see here that really in terms of gold, and it's really important what we measure things with, value with, and the system that we have of measuring value versus debt, because the fiat dollar is debt, is an anomaly. For 2,500 years, up until August 15th, 1971, value was measured as a weight of gold or silver, something tangible, the most marketable commodity, right? That's what it was. And it still is. They can keep trying to hide everything, but eventually gold and silver are going to come back, because this system can't keep going forever, because you can't keep inflating the debt forever. And there are some who think it can be done just because it's been done for the last 40 years. But what they don't look at are charts like this, that in terms of real money, we're actually seeing a great depression, I would say. And you might think, what are you talking about? We're not even in a recession yet. I think you have to look at the bigger picture from 30,000 feet. And if you look at the wealth disparity in the US and Western Europe, if you look at the political climate, the divisiveness everywhere around the West, if you look at the social craziness that we have, and if you look at the geopolitical situation, since I've been alive, I've never seen it in the West as it is. And I think it's a symptom of this Great Depression.
In today's volatile economic environment, gold remains a vital tool for preserving wealth and mitigating the risks posed by fiat currencies and inflation. As central banks struggle to maintain stability, individuals can protect their financial future by turning to gold and silver as reliable stores of value. How might the Federal Reserve's future interest rate decisions impact the value of gold and other precious metals? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.